Ladies and gentlemen, Kim here. Welcome to the market update. Hope you guys had a good day trading. Well, market is closed today, so I hope you guys had a good week this week trading. It's good to have a 3-day weekend. It's always nice to have a day when the market is closed. It's so much more peaceful, right? Because when the market is open, there's always a little bit of anxiety there. You're always going to think back of your head that the market is open. You're wondering about certain tickers, what the market is doing. It's always gonna kind of, you know what I'm saying? You're always gonna think about it a little bit when the market is open. It's always gonna be, lingering around. But when the market is closed, it is beautiful. It's quiet. It's calm. And I love it. And then I always love long 3-day weekends. It's always good to have that rest for your brain and for your mind, and to rejuvenate over the long 3-day weekend, and then come back strong on Monday. So it looks like on Thursday, S&P closed the day with 1% positive tear. You can see the year-to-date numbers in that category right there. So S&P is positive 7% year-to-date. NASDAQ is 3%. NASDAQ did close the day on Thursday close to 2%. Semiconductor continues to make a move, continues to march higher, 15% year to date, trumping the NASDAQ. I mean, semiconductor has been on fire since 2020 lows. I mean, it's the semiconductor that actually outperformed every other index and sectors in 2020. And looks like even this year, it's on the way to kind of staying on top. Obviously, though, X Energy is doing much better. But keep in mind, the energy has been struggling so many years, though. So overall, semiconductor is still a winner there. Dow is, up a little bit. But Dow is actually beating the S&P and the NASDAQ. Keep in mind, these guys right here, the Dow, the Russell, the transport, the banks, and the energy, all these guys you see right here, including Dow, they were heavily lagging in 2020. They all started coming back, towards the last quarter of 2020. And we talked about the great rotation that is going to occur, right? Remember, NASDAQ was the first one to make the new all-time high within 2 months or so. And then S&P, about 3 to 4 months, made a new all-time highs. Semiconductor obviously made an all-time high, along with the NASDAQ very, very quickly. But it was the Dow, it was the Russell, it was the transport, and the banks. They were just heavily lagging. And a lot of people view that as a negative thing, that this market is propped up. I think somebody used analogy like this market is only propped up by one leg in the chair. So there are 4 legs in the chair, but it's only propped up by one leg. Sooner or later, the whole thing is going to collapse and we're going to go to Great Depression. That's what a lot of people are saying, but not understanding the market made that great rotation, and the NASDAQ and the S&P kind of slowed down, right? Last 3-4 months or so in the last quarter of 2020, and even this year in the first quarter, as you can see, letting the laggers to catch up. And with that rotation, market has been rebalancing itself. This is something we've been talking about in the last 3-4 months or so, right? Russell 2000 is continue to outperform the S&P and the NASDAQ. Transport outperforming everything, actually. Look at right here. Transport's up about 1% along with the Russell 2000 on Thursday. But transport's up 17% year to date. We got banks up about 17%. Energy is up about 32% year to date this year in the last 3 months. Made a good move here, about 2.5% on Thursday. We got some of these guys slightly green. Oil is also up about 3% on Thursday. Dollars down. Treasury bond is up about 2%. VIX got hammered, is down 10%. Gold and silver are making some traction here, but still struggling year to date. It's been struggling for the last 4 months or so. Bitcoin doing really well year to date, about 60%. But keep in mind, Grayscale Bitcoin made 500% since the October lows. So we had a huge gain there, about 1.65%. But tonight, this weekend analysis, we'll be sticking with these tickers here: Spider Qs, gold and silver, Grayscale, Bitcoin. It is all coming up right now. All right, let's kind of go back to that 65-minute chart and follow up with what we've been talking about this entire week. So this entire week has been really important week. Everything all started off with that bullish divergence here. We got the low, lower low. We got the low, higher low. Not to mention that rising uptrend support on my oscillator. And then not to mention when we had that cultivation of a lower low, and with that we had that higher low on that oscillator, which is a bullish divergence, and that's the exact same level coinciding with my gap area and my midterm moving average. We talked about that level is a strong support, especially we're feeling here with that bullish divergence. On top of that, that was the low. That was the bottom at 380 last about 2 weeks ago on the March 25th, and then ever since then we swiftly made a move. Along the way, we had some some up and down, some little bit of volatility and things like that. But once we retest that short-term moving average, we continue to march higher using that short-term moving average as what? Support, right? Prior resistance acting as support. In that process, this gap is open, this gap is open, this little tiny gap is open, and the big gap up that we saw, relatively speaking, bigger gap up we saw on Thursday is open, and pretty much we kept moving higher. Right off the bat here, you can see first hour, second hour, third hour, fourth hour, fifth hour, sixth hour, just all throughout entire day on Thursday, yesterday, market continued to make a move, and we're seeing that 400 move. We are seeing that 400 print on the S&P, making new all-time highs there. And we talked about this yesterday. We were not quite overbought here, and you can see that it looks like the oscillator is going for. It's been a while since we actually tagged the extreme overbought, because you can see in the last couple of times where we got there, but it ended up just falling back down. This might be the first time getting up here to extreme overbought. That's actually a good thing. You want to see bulls pushing all the way up, right? And showing that strength before this thing needs to reset and potentially some kind of a consolidation or short-term pullback or something like this. So obviously, which we've been in bullish sentiment in the short term ever since this reclaim back in March 26, we want to continue to give benefit of the doubt to the buyers in the short term. Let's go back to the daily chart right here. Let's check out this chart right here. We talked about this. I actually was tweeting this out. I tweeted this out yesterday after close. It's very interesting for me. It's almost peculiar to see the spider print 400, right? I mean, it was just a year ago. We are at 200. And I just want you to think back and remember what it was like. What was the environment like? You know, what was that? What was your emotions and feelings? What was it like? Who were you listening to back then? What were some of the things they were saying? Because I want you to remember these things so you don't make the same mistake, right? Because market pretty much fooled everyone with the COVID, COVID and with the lockdown, the lowest unemployment rate since Great Depression. I mean, who would ever thought that market will be up here just a year later? Remember this, market always, I mean always, fools the majority. Therefore, the majority always follow the fools. Just remember what the mainstream media was talking about regarding to the stock market. Remember your quote-unquote teachers and experts and gurus on Twitter and YouTube, what they were saying where the market is headed. Almost every single one of them have been exposed by the market. Just remember, after all these moves, is there anybody actually gained something out of this? Or were you so scared trying to go in and out, trying to avoid corrections and missed out big moves? Right? And that's how you really gonna suffer. You're gonna have your account suffer and dismantle that compounding effect. I think a lot of people care so much and they're so scared of trying to avoid correction, and what happens is they end up missing out the big rallies. And this is I see all the time. You know what I mean? Just S&P 500 just made a move from 200 to 400 in just a year. And you being too cautious, too fearful, not understanding the secular, the macro trend of things, trying to call top or trying to go in and out of trades, what happens is you end up missing out huge opportunities that might come within that time frame when you're trying to get out of it, or you thought there's going to be bigger decline, you thought there's going to be a bear market rally, you thought it's not sustainable, you thought the market should not be up here, you thought that this market is disconnected from the reality, something I heard a lot on Twitter, which is all wrong. They're all wrong. Your theory, your hypothesis, your prediction, your quote-unquote analysis, none of it matters if you cannot profit from the market, right? It is, I think, the biggest hindrance for us investors is that we're constantly battling with greed and fear. And people who doesn't know how to manage that very feeling and emotion that we all carry is going to be the people that are not going to able to withstand this market's volatility. We've been tracking this rising pivot for quite some time here, for months, and this support, that pivot, not once breached. Right? There were a lot of volatilities ever since November, though. Right? November, December, January, February. Now we're going into April. So for about, we'll say, November, December, January, February, for about 5 months, we've been in this up and down move. And I've clearly said and mentioned this before that it is nothing for long-term investors and position traders. Market is at 400, and people who are just always in fear, always freaking out in panic every time there's some percentage decline. Every time there's some volatility, not understanding the big trend of things. Usually, always trying to go in and out of positions, trying to be quote unquote nimble, trying to scalp these positions. They usually end up missing out big run and usually getting chopped to death in an environment when it's choppy. And people who trying to avoid corrections, they think it's going to be a bigger decline, right? And a lot of times they miss out big rallies that might come later. They miss out big rallies, trying to avoid corrections. That's why it is not easy. People say stuff like, oh, we're in a bull market, just keep buying the dips, everybody make money. That's completely false. That's completely false. Do you really think everybody's making money? When it comes to retail traders, no. 90-some percentage more of the retail traders are struggling, despite the fact that market has been this just monster bullish rally that we haven't seen ever. I mean, this is the biggest bull market rally, you know, the fastest V-shaped reversal we've ever witnessed since the inception of this market. It is true. We've never seen market come down 35%, recover within 4 months, and continues on and makes about 80 to 100% gain in just 1 year. That has never happened. Go back and check. See if you can find any other time where we see 35% correction and just 2-3 months later we make all-time highs, and then a year later it's up 80 to 100%. You will not find any time in the history of stock market that has ever happened. I've been telling you that we want to give benefit of the doubt to the buyers for a very, very long time. It sounds boring, but you can see for months and on, the market gave the benefit of the doubt to the buyers as we're making new all-time highs. We're sitting at 400. It is most difficult thing to witness and go through, knowing that the S&P 500 is at 400. But, you know, most retail traders, they got nothing to show for. They're in and out. They're trying to avoid corrections. They missed out big rallies. America made a huge move, but they really haven't profited much. And usually are those people who are gonna start calling for this not gonna end well. You know, this is, you know, disconnected from the reality. You know, just going to be whining and moaning on social media because they're not partaking in this just wonderful move, this raging bullish move that we're witnessing in the last 1 year, which I believe it will continue throughout this year. Obviously, man, there will be corrections. There will be pullbacks. There will be shenanigans. There will be heart-throbbing down day, gap down 2%. All of that, it's gonna happen. But every time, whenever there's a little bit of volatility, every time if you freak out, you're not truly understanding how this market operates. So I want to continue. I really sound like a broken record here. I want to continue to give a benefit of the doubt to the buyers. And, you know, a lot of my long-term holding positions, that's including index funds and long-term holding shares on equities in different sectors and things like that, that I've been accumulating heavily since the March lows, April lows, and May lows, you know, 2020, last year. And I've been holding all of them in full, my long-term position. I have not closed out any of it. And that means I had to go through these pullbacks, but I've actually added more, as my clients know, and as the data that can back up that I've been adding more at these levels. Instead of, you know, calling for top so quickly, instead of calling for crash so quickly, And despite the fact that we are up here, not a lot of people are very happy, right? Because market always follows the majority, and therefore majority people are not partaking in what this market is producing. You can see that we still have higher highs and higher, and this is a very, just understanding higher lows and higher highs is very rudimentary technical analysis. It's nothing fancy or, deep. It's just very basic technical analysis one-on-one. Just understanding higher lows and higher highs and assuming that it will continue in that fashion, right? That's why when I say benefit of the doubt goes to the buyers, that does not mean it's going to go straight up. What does that mean? Do you guys remember? When I say benefit of the doubt goes to the buyers, it means in an event that when we see a pullback, it has high probability, not guaranteed, but high probability of cultivating that higher low before making that higher high. That's what I mean when I say benefit of the doubt goes to the buyers. And that's exactly this market has been doing for the entire year, right? We're now back off of my on my daily chart, short-term moving average, mid-term moving average. It's interesting because if you check out my mid-term moving average right here, that dotted blue moving average, ever since it got reclaimed right here, and that was that election week ramp, right? If you check out that mid-term moving average, it has never kind of breached below. Market has really never closed below it. Here, we held it here, we held it right here. And obviously we have that rising pivot also protecting that level. Let's check out Qs, see where that you can see. And this is what we talked about on the last weekend analysis video. As long as we hold and protect this gap area, there's a good chance that bulls are going up here to fill that gap, right? And in that process, we opened up this gap this week and this gap. So this gap's open, this little gap open, and this gap's open. What I'm gonna do now, I'm gonna move this right here, like that. And I'm gonna do it like this because we got the prior resist. That's what I call neckline, right? So there's a prior resistance here, potential new support. We got the gap areas, potentially support. We got the gap fill area, potentially support. And what the bulls want to do is kill this down pressure by filling this gap next coming week. And you can see right here, we perfectly respected this level, right? I mean, that is pretty obvious support. Sometimes obvious support plays out, sometimes it don't. Sometimes they like to give you a little head fake, little shenanigans. But this time around, the NASDAQ decided it's going to be a smooth support. That pivot, it's going to act as support, right? It decided it's not going to give you any shenanigans. Sometimes it likes to do that. Just zooming out here, right? How long we've been tracking this level? Ever since we broke above it right here. July last year. We said we're going to hold this level. We hold this level. Boom. Right? And then what happened? We pulled back. We didn't pull all the way back down. What happened? It stopped short in the middle, which is the next pivot. And in that process, what happened? That's a low. That's a higher low, right? I mean, can we all agree that that's higher than this one? And that high is higher than this one, right? What do you call that? An uptrend. Higher lows and higher highs here. Can you imagine NASDAQ Qs trading at 160s? I mean, it went as high as 340s, currently trading at 330s. That's an incredible move this market has produced. And I mean, I'm heavily invested on these index funds since at these lows, and I haven't closed out a single share. And even with this pullback, I held through it. This pullback, I held through it. And I was taking advantage of some of those moves, buying some call options and things like that. But for my long-term investing positions, I held through it. And I let them compound over time. We want to continue to give benefit of the doubt to the buyers on NASDAQ also. I know it's high. And this is how this market is going to make it very difficult for people to come back in later. The market has always done this. So if you didn't go long and you're in this vicinity, market is going to make sure it's going to be extremely difficult to try to go all out long anywhere up here because you think this is it's up way too much. It can't possibly keep going higher type of thinking, right? And that's why I think a lot of people, because they feel so uncomfortable going long at this level, a lot of people want to see another big drawdown. We're talking big, like 30%, another COVID. They want to see another COVID decline. That's not going to happen this year. So let's see if the NASDAQ can get up here and fill this gap. And then, once the gap gets filled, what's going to happen is it's going to act as resistance, potentially retest this level before going higher. Obviously, the best case scenario, go up, gap it up, turn this into an island, and have this smooth transition back up to the new all-time high. So let's go to gold here. So, since our last analysis that I've done last week, nothing has changed. We talked about this level right here. That's the important pivotal level, right? Prior resistance, support, and my last level of fib also. As I look at my daily chart, there might be some sort of a bullish divergence here. It's not fully confirmed yet. There's something I see that, for that to confirm, we need to see something like this and some higher lows and higher highs. We don't have any of that, right? And obviously, we're in the midterm, short to midterm, it is in a downtrend. Right? I got a lower highs and lower lows. But in the primary term, are we, in the long term, are we in an uptrend or downtrend? In a long term, we are in an uptrend, right? It's just that we're in a downtrend in short to midterm. Keep in mind, this is, you're going to have these lethargic down days, months. I mean, this has been doing this for almost now what? We got 8 months. Just been doing nothing and pulling back. So this is why you do not chase ever. Anybody who chase it up here, they've been have to go through all of this in pain, or they've gotten stopped out already, or trying to go in and out and just got whipsawed. Look at these head fakers there. So I think we need more. But we want to give benefit of the doubt to the sellers in the short to midterm. But in the long term, it's still bullish. We want to give benefit of the doubt to the buyers in the long term. I hope you guys understand what I mean, because I'm giving you short term, midterm bearish, but long term bullish. That means in the short term, there's still work that needs to be done before that sentiment can change. I'll just glance at silver quickly here. Silver's a little bit better just because we're still in the still in the level of potentially higher low. So it's a little bit better as far as the price action is concerned versus the gold. Let's check out that grayscale Bitcoin, and I'll let you guys go with this. So we're kind of stalling here. You can see that gap was never filled. That gap needs to be filled as quickly as possible. Last time when that gap didn't get filled, we did see that pretty quick plunge 2 weeks ago. This gap must be filled if the buyers want to see any kind of pressure, buying pressure to the upside. If this gap don't get filled, there could be more decline. Even though if we maybe get above this current resistance here, if this gap doesn't get filled, things could get hectic. So I think what buyers need to, obviously we need to get above this resistance. While the benefit of doubt is actually still to the buyers in the midterm and in the long term, because we got these higher highs and higher lows. Only thing in the short term, where we did cultivate at that lower high, right? That's definitely not higher high in the short term. So if this turns out to be another lower high and this thing starts to fall, I think that could be trouble for the Bitcoin. So If you're a Bitcoin bull here, if you're a Bitcoin buyer and holder to the long side, you really want to see this gap getting filled as quickly as possible. You guys enjoy this long 3-day weekend. I'll come back for you next week, and good luck trading next week.